Good morning, everyone, and welcome to the European crossover webinar. And we're just taking a look at two markets kind of going in different directions. Here's crude. Now, we have rolled over to the October crude. Remember, we had 69.40 was pretty much key for us, although the market vacillated there within probably about a 50-cent trading range at best for actually about 2.5 days or so, but that 69.50 capped the market. And then eventually we did go on and roll down, and then we've even extended that further news or that further move. I don't really pay attention to the news in crude. It's just too much and too many variables. So just try and focus on the price. Obviously, I'm aware of like if there's a if we got inventories or anything like that, but other than those weekly reports, don't really pay too much attention to the news overall. And I haven't even traded that much other than that time I picked it up at the bottom. I think it was right down in here, but we've rolled into the October, so it was September. And I never did jump back in here. I had a couple of opportunities, I just didn't. And then I didn't even pay attention to this roll down. That being said, also gold has had a nice, well, I wouldn't say a great rebound. It's an okay rebound. I'm just saying it's just bearish. And remember, we were really bearish, and that's not patting on the back or anything like that. That's just we went ad nauseum discussing this whole area right in here. And I myself thought it was going to, once we got about 1824, I thought, okay, we're on our way. And then we slid right back down. And then when it continued to go on and just not be able to get off the ground, then it looked quite susceptible. And certainly we did break down. I didn't think we even break down to this extent, but obviously they really caught some people with their pants down who are looking for much bigger moves on the upside. I thought maybe we'd make it down to 1740. That was my you remember even from a month before, I thought we were going to get down there, and then I think the Fed came out not so bearish or something, and we had bounced back again up in that upper area. So I thought, okay, well, maybe make it down to 1740. Maybe we'll go and dip into the 30s or high 20s. But man, the wheels came off the caboose. I wasn't even in front of the computer when this whole thing essentially collapsed, but it fell to that big weekly level, which was the 1680, and they rebounded rather smartly. And then we were on air when we got up to 1754, and we just kind of vacillated here. And then we rolled back down, dipped, I think, just barely sub 1720, and have since been rebounding. And I was a little bit surprised we even got this far. I thought the resistance probably would have been around 67, 70-ish, but we did push up just past the 61%. And well, we've got 86, and then there's a little bit more resistance above that. We'll actually take a look at the profile, see if we can get some better idea. But I think that 85 is a pretty good area on the profile anyway. And then the other market making a pretty good move has been Bitcoin. Had a pretty good continuous move on this market. And we are up into some key areas. Maybe they can get one more push because, anybody that got thought, okay, we're going to roll downhill here. And we did pop up. Now we're really going to roll downhill, which they did. They came up, and then probably some people said, okay, now I'm going to get back short again for the move. They may have gotten stopped out. So maybe we can push up one little last point, and then maybe we'll have to come back to, it's not bearish by any means, but I'm saying come back to balance things out, pick up some new longs or whatever. And of course, indices still trading very strong. Here's the Nasdaq on the daily, still up here in the stratosphere, but we are having some trouble really getting a move higher. And you could say the same thing about the S&Ps, although it's bullish. But I did post that in the room. As far as the volume in SPY, SPY was the lowest volume in 5 years, excluding Christmas week of 2019 and Thanksgiving of 2017. So the point being is, once again, if you look at it, it's still bullish. But that being said, it is the with those underpinnings, it makes the market susceptible. It doesn't mean that you have to think, okay, now we're going to go down. No, but if when we do get, for whatever reason, a good break, then you know that this thing is really going to go on. There won't be too much holding it. We'll make it, instead of like these little moves down here, if we do get a good break, then you'll probably be looking for a move down here to 43.5. And that's not to go on and go overboard. I'm just saying is the underpinnings. Remember, we've been saying the volume since May has been weak, but it's continued to get weaker and weaker. So you kind of think of it as a house, and it's got a poor foundation. So if you get a pretty good storm, it's gonna really fall apart rather quickly. And I think that's what we're looking at here. It doesn't mean, once again, the market's held up overall, but with each move higher, the volume keeps getting lighter and lighter and lighter, to the extent that, like I said, this past week in the SPYs, lowest volume in 5 years on a weekly basis, excluding, as I said, Christmas of 2019 and Thanksgiving of 2017. And of course, we're in the summer doldrums, but hey, what happened to the summer doldrums in 2020? What happened to the summer doldrums in 2019, in 2018, 2017, 2016? I mean, this beats all those for the lowest volume, which would be fine if we're down in here, but we're up here in making new all-time highs every day. So it just, once again, doesn't mean you get bearish and mortgage a house. It just means that when we do break, then you definitely, one thing's for sure, you definitely don't want to be sitting there trying to catch a falling knife, because when we do break, when we do get a solid break, then you know there'll be follow through, and everybody else is going to know that. So now we'll be pressing lower. The most bigger, I wouldn't say bigger, but we do have some support at 44.42 and 44.34. But the key support right now is going to be 44.12, and then a break of that would put you at 43.98, and then beyond that, probably about 43.70, and then the more key one would be 43.56 before we get down here. But that's where we stand here. So taking a look as far as economic calendar, let's see. I don't think we really have anything of any real significance. There is Canadian data at 8:30 Eastern. It's manufacturing sales and wholesales at 8:30 Eastern, and that's going to be it. So we'll go on a move and get started with the analysis. Just kind of give the lay of the land before we start out the week. We've done that before, where we kind of lay out the resistance and levels, not so much for the day immediate, but kind of like the lay of the land of where we're going for the week. So let's go on and get started with that. Obviously, you can see here I've rolled into the October crude. Not sure why this thing's all the way over here. Okay, let's take a look at the euro. So the euro closed the week at its high, still within a tight range for the prior week, after an unsuccessful attempt to move to sub 117. Initial resistance for the week comes in at 1835 with support at 1748. Well, we talked about this. We kept thinking we were going to move lower. The key thing is that, remember, and just to put some context on this, we had our support at 1748, and on this move down here, we missed the low by 3 pips. The reason I'm trying to point that out is that that was some key support. Obviously, we saw a pretty good bounce off that. When we came back down, remember, we had support then at 1713, and that was our support that we're looking to into this week coming in. Matter of fact, we stayed at that 1713. Matter of fact, the I think whatever report it was, I don't know if it's ECB. I really don't even remember some of these reports. I really, because I don't pay that much attention to the actual, things like that, because the only thing that matters is levels, because levels is where people, regardless of whether you're betting the Fed or you're betting this or that, that's where you're going to have to get out. It's dependent on the levels, not whether Christine Lagarde said this or that. So we had this range in here, it was area between 1748 and 1713. So I'm thinking, well, we came close to hitting that. We saw a significant bounce. If they break that, now we got support here at 1713. I just don't see this thing making a move beyond that. And I don't know if people got real bearish a euro or whatever, but they were wrong if they got real bearish a euro, because once again, and I'm talking about down here, not on the bounce, real bit, because look at this. I'm saying, I always would go with the levels and I try to get the most, what I call the most touches. And you can see this 1713. Look at this. We drop down here. There's a little bit of a dog fight here. We drop here. We come back and another fight here. They're fighting here. Really a tug of war between the bulls and the bears. Finally, the bulls went out to come back. And where do they come back down again? Right back to the 1713. Actually, you can make the case that they dipped just a little bit lower, 1707. But you can see here now on the rebound. You see the rebound back? They rally back up here almost to that 1713. They fall back and they challenge again. They get a close above it. The market comes back on this. Look at that right there. Try and push this back so you get a better idea. Okay, you see here, they come back in here. They push back up in here and they close just above the 1713. They take one more dip. And guess what? Even though they close lower, they close above 1713 and it was blue skies ahead. Look at that. So you can see the significance. So if people got really bearish a euro down here, I mean, look, sorry, folks, you just weren't paying attention to the technicals. And I always say here, it's all about the levels. It's all about the levels. Probably drives some people bananas, but isn't it about the levels? Because that's what I'm saying. Is it with this one, we only missed off by 3 pips. And I thought, okay, here's support. We break lower. The move is down to 1713. And even on that day that I think we were trying to break lower, I moved my support from 1713 to 1705. And even then, it still couldn't break 117. So that's what I'm saying. You can see there was a lot of demand down there. So we're getting a bounce. We'll see what the bounce is made of. But certainly it's warranted for a bounce. But we do have some support, not support, but some stand right there. You see that 1793? These touches coming across here. And I always tell you, I like to look at the bodies. I don't care much about the wicks. Now, if there's nothing to hang my hat on, I'll look at the wicks. But I like to look at the bodies. You can see here, look, see that body close? Because look, that wick came in here, that body close. We couldn't take out that body close from right there, which is 1793. Because I always say the close, whether you're looking at an hourly, a 2 hour, a daily, a weekly, the close is the put up or shut up time. That's the point where you go, well, I mean, I don't know. I got to get out by the close. You see what I'm saying? So that you'll see prices gravitate towards a key level going into a close because they know bulls have got to throw in the towel or bears have got to cover, whatever the case may be. So this is that next key area here. Now, right here, it comes in right there at 1835. So that's where I came in. I said, okay, that's going to be the key laying out there. Now, like I said, right in here, we have the 1793. You see right here, coming to this close here. But like I said, that's the key area for the week to start out, which is going to be 1835. And the reason I'm pointing this out is because we do have new people in the room, and so they kind of get a better idea of what we're looking at. And our support's going to be 1748, which is a key area. It doesn't mean it's going to get all the way down to 1748, but that's the line in the sand. That's where we are here at the Alamo. Got to defend that 1748 if you're bullish. Doesn't mean that we couldn't dip a little bit before, but it's going to be key that it holds. I don't even think we'll even get down there today, but just like we did on last Monday, we'll give a lay of the land for the week ahead. And once again, for those that are new, is the bias chart that we have is on a very, very short-term basis. We're looking at support and resistance over the next 24 to 38 hours, but 24 to 30 hours. Like I said, on Mondays, we generally have a little bit wider scope because generally sometimes you'll come in on Monday, and of course, besides also we're in the dog days of summer. So we kind of give a lay of the land is where are we looking out? Now, if it was today, Tuesday, we might be saying, oh, our resistance now is going to be 1802 or something like that. Might be a little bit tighter, but we kind of give a lay of the land for Monday as we come in to start the week. So now let's go to cable. Bear with me. So let's take a look at cable. So cable reversed Thursday's down move. Here's Thursday's down move. So we reversed it on Friday. Thursday's down move to close the week at the level of 38.59. You can see that that's a level that we had on the way down. Remember, initial resistance to start the week will be 39.02. So obviously we're giving a little bit more room here. And actually I was going to have it at 38.86, but I said, nah, that's just a little bit too close. I mean, we're starting out the week. Maybe if it was intraday, but so the key level to start the week is going to be 39.02 with support at 38.13. Remember, with 38.13 was a key level for us on the way down for support. So it's going to be 38.13. And 39.02. Still bearish bet on a short-term basis. And let's go move into the Aussie. Look at this thing, man. It's like a freaking yo-yo. Look at this. It's crazy. Up, down, up, down, up, down, up, down, up, down, down, up, down, up. I mean, it's crazy. It's just not going anywhere. So the Aussie posted a small rebound rally, you can see that right here, to close the week. The pair remains within a 75 pip range. The pair needs a close above 74.27 or below 72.87 to 72.87 to determine the next move. So, you know, we can, once again, we can look and say, oh, the resistance is right here at 74.02 and it's here. Look, you know, these are going to be the key areas for them to get above or below. I thought we'd already made a move below the 72.87. Remember, we had 72.87 and the low on this move down here was 72.89. That's when we came in a few weeks ago and said, look, that's where it's going. I don't care about all this other stuff. What's happening now, that's where it's going. So it ended up holding. I thought, okay, well, it looks like, certainly looks like when we tried up in here and it tagged our weekly resistance, and on that date, I don't know if it was the NFP or whatever, we had actually given it more room for it to get maybe up to 74.40 to gun some stops, but they quickly sold into it. So these are the key levels for right now. I guess we're going and keep it here at 74.02, but remember, it's 74.27. A close above that, and we can get back, although it certainly doesn't seem like it would do that. And then below that, it's going to be the key, which I'll stick with this one, go back to that, which is at 72.87. If we get a close below 72.87 or a close above 74.27, that lays the direction. Usually I like to see 2 consecutive closes, but in this case, I don't think it's going to make a difference. If we get a close above 74.27, it's on its way. Next up is the dollar yen. This one really took a whack on Friday. So the dollar yen faded strongly to close on Friday. Support to start the week will be 9.34. Looks like we just got a hair below that, or a little bit below it, with resistance at 10.09. Man, this doesn't even look like it's going to come anywhere near 10.09. So one of the things that we do is we like to stick to our levels, but we also look at things realistically. So to stand here and say, oh yeah, resistance is 1009 is just would be pathetic. So now we'll look at this body close here. That would be 991. And then let's take a look at a 2-hour chart. Man, the wheels came off this caboose. So right now it looks like 986, and 986 looks like forever and a day away. Hang on. You can see these touches come in. You can see right here, the high here, these bodies here coincides almost with the low there, the body there. So we'll go right there. So basically call it right there, 976. And you can see when they try to come up, they couldn't get any higher than 974. So it's going to be 976. And it doesn't look too bullish anymore. Let's take a look at the daily. We have to say this thing's in a range now. Now let's go to the cash dollar index. Remember, we had that 93.26. Remember, we've had that before. It couldn't get above 93.26. We tried to challenge it again. We had 93.26, only got up as high as 93.19. That has served us very, very well, that 93.26. It just goes to show you if you go with the touches. And I think we were deriving that off of the weekly chart at the time. But anyway, so the dollar index could not get above the bias chart resistance of 93.26. High for the week was 92.19. The indices slid. The index slid back to 92.53. Support for the week will be 92.27. Now 92.53, and actually last week we had 92.56, and I think the market went or held against that area or in that general area. Is a key level, but anyone who was bullish, they'll be thinking, well, I'm not going to step in now. I'll let this market work lower. So the key level to start the week is going to be 92.27. Once again, doesn't mean that we're going to get to 92.27 today, but that would be a key level if you're bullish, the buck, and you're thinking about buying it, or maybe you use this as a basically an inverse relationship to the euro, then you might be saying, okay, well, if it gets to 92.27, then I know probably the euro is at its high, and maybe I'll use that in conjunction with what I'm looking at the euro to think, okay, now it's time to get out of any euro longs, or possibly get short the euro, depending on what your thoughts are on that. Resistance is going to be 92.80. And it's still going to remain bullish overall because things haven't. Look at this. You'd have to still say that's bullish. Okay, so now let's get into Bitcoin. And this has been something else. So Bitcoin closed above 47,500. You can see that. I thought they were going to have some trouble with this 46,412, which they did, and they paired back. But this was a nice, solid close on that. I mean, that looks solid as a rock. And we even closed above 47,500. So Bitcoin closed about 47,500. As the upside move continues, the next target is 49,215. You can see the body touches coming across here. And that kind of confluence is here with this. You can see here, this close right there. It actually should be a little bit lower here. Right there. There we go. That should actually be 49,164. Let's correct that. The next target is going to be 49,164. Immediate resistance, though, is going to be 48,381. And when I'm coming up with that is the low of this wick. You see this wick here? The low of that is 48,381. So although you can see the marks kind of have a little bit of a tough time right here, they almost actually got to the 48,381. So put right here, 48,381. And support will be 46,412. You can see we're coming here with that 46,412. That's going to be support. What was resistance before becomes support. So what was the ceiling before now becomes the, I don't know if we call it the basement or whatever, but the floor. Doesn't mean you can't get beyond that, but that's where you'll see people starting to step in, maybe trying to support this movement. We'll take a look at it on a 2 hour and a 30 minute. So let's take a look at a 2 hour chart. There's nothing significant to say, oh yeah, other than we engulfed this. So then that would have opened the door for us to move a little bit lower, but nothing to really hang your hat on to say there you were seeing something. I think the market just overdone. On a 30 minute, same thing, not anything of any real significance I see here, other than we got a little bit overdone. Now the market's pulling back. I was going to see if they might make one more little push up here, but the market's pretty stretched at this part. At this point, we've had a pretty good solid run. If you look at this, this is look at that. Okay, with that, we're going to move into the SPOOs. So SPX futures with another all-time highs. Volume continues to dry up. Technically, the market is, or I should say, remains bullish, but the underpinning suggests vulnerability to a pullback. Like I said, it doesn't mean like, oh, we got a pullback coming on the horizon. It doesn't mean that, or at least that's not what I'm trying to convey. Although the volume's been weak since May, so it's like, oh, well, yeah, okay, big deal. Have we been moving since hard since May? Well, yeah, okay, then don't worry about it. And yeah, the point I'm trying to make is, and like I said, the volume in the SPYs is the low. This past week was the lowest in 5 years, excluding Christmas of 2019. So come on, Christmas week and Thanksgiving week of 2017. So wow, the lowest volume in 5 years, yet we're making all-time highs. The thought is, and I'll say it again, is if we do break, and we see not only a dip, but we see a pretty good solid pullback, then you definitely would, if you, it looks like it has legs, you definitely would not be trying to pick this thing up. I.e., an example would be like, okay, you may get a bounce from 44.12, but I'm telling you right now, there will be people that will get short, and you might get a bounce from 44.12, and it might bounce up to the mid 20s, maybe as high as 44.27, but then the thing will probably just completely come right apart, and when they slam it against 44.12, 43.98 is just probably going to be a signpost on the way down to about 43.90ish maybe, and then maybe we get a bounce back into the upper single digits, maybe up to 12 again, and then we'd rotate lower and they'd be looking for an overall move down to about 43.56. So that's all I'm trying to say. Resistance will be 44.68. And support will be 44.45 followed by 44.34. So let's just stay with the 44.34. Yeah, 44.45, but that is, and that's going to be support. It is, but it's so close. You can see right here. Here's 44. You see right there? So actually, it should have put 44.44. But that being said, and beyond that, here's 44.34. You see right there. 35, but one whatchamacallit, if you move this down here to this body right there, I'm going to run this across. You see, 44.34. So we'll go with we'll stay with the 44.34, and then of course the break lower is 44.12 down here, right there. You see here, right there, 12 3/4. So that's super huge. 44.12 is going to be super huge. A break beyond that takes us down to 43.98. You can see right there coming in 4,400, but then get that dip on this bar. And I'm just not backing it up further, but it's 43.98 is key. And you might even get overshoots. So like on the first move beyond that, if we were to break that, even if you try to hold the 43.98, we probably get overshoots down to about 43.94 is like, because no one's going to stand the way then. You see what I'm saying? They'll let it go as far as it goes. They may step in around 43.94 and try and pick it up. But once again, pick it up maybe like uncover it. I would not be trying to pick this up because it may kind of get really overdone. It might unwind. And so where people thinking, oh, 43.98, and people will stand aside and let it, if it's hitting be on a break, a decent break, people would say, well, let's see if it slides down to about 43.94 and maybe even to 92. That's where they'll probably have their limits to cover. But you could see this market maybe kind of hold at 43.94, kind of bounce to 43.96 3/4, and then roll right back down and goose it all the way down to 43.87 and really knock some people out of the box. And then we try to work a little bit higher. But the problem is once you get down to, let's say, and I'm just throwing out numbers, you get down to 43.87 or 43.87, 43.86 and a half, and spook some people. Now on the rally back to 43.80, 43.96, 94, 95, people are going to try to be loading up and saying, oh no, we're going to see 43.56. I'm not worried if it gets above 44, 44.05, maybe 44.7. Screw it. I'm getting short right now. And so you'd have a tough time. And then let's say maybe it does kind of inkle its way up to about 44.02, and then we slide on down. And next stop beyond that is going to be 78 or 74. And then eventually we get down to 56, which would be huge. So just trying to put, once again, trying to give some context as we start out the week. And what I'm referring to is, as I say, as volume continues to dry up, technically the market remains bullish, but the underpinning suggests vulnerability to a pullback. And we're really having a tough time trying to move up higher. So you really have to be cognizant of that. Doesn't mean that we're going to fall apart, because technically this market is still very, very bullish. But if we do start to slide, people will not be trying to step in and cover, or try to, more importantly, trying to buy with any conviction whatsoever. Matter of fact, to be quite honest with you, on a break like this can be the suckers. I've been one of those suckers before. They would try and step in and then whoosh. And that's what I'm saying. You always have to be careful. Sometimes, I might have support on a level, I'm like on this pullback. But the problem is when you break that hard, even if it is support and people come in and cover, it's the old thing. Like Blake used to say, you fall off a ladder from a good height. You don't just bounce up real quick. Yeah, if you fall off a, little stool, you're up about 1.5 feet up in the air, you might pop up real quick. You fall off a ladder from 10 feet up in the air, you're not going to spring up. You're thinking, whoa, do I have any broken bones? So the market's going to have even if it finds support there, it's going to have a tough time trying to pick up. And then it's most likely to go and even try and test a little bit lower, even though there may be some volume there. So anyway, just trying to provide that context. Take a look at the Nasdaq. We're still trying to bump up against here. We are holding above the 15,100. We pulled down here to the 20-day simple moving average. I don't really use moving averages. Like I said, most of my analysis is pretty much cut and dry, which everybody's got their own way of trading. I'm not here to dog anybody or poke fun at. Although sometimes I have strong opinions, but I can tell you that I've used every tool in the toolbox. And one thing I loathe are oscillators. I mean, like I said, if you're going to talk to me about being, who cares about the volume? Have we gone higher? Yeah, okay, don't worry about it. Yeah, here's we're overbought, we're kind of overbought, we're more overbought, we're extremely overbought, let's mortgage the house, we're so overbought now, mortgage grandma's house, and the market just keeps going higher. So I think oscillators are the biggest bunch of BS. All they are is derivatives of price, nothing more than that. But like I said, on longer term moving averages, you can see certainly can see a trend. And so you can see here that the market has been holding up pretty well against the 20-day moving average. The one thing I will note here is that you have to be a little bit concerned from a bigger standpoint, is these touches of the of the 20-day moving average. They resulted in gigantic moves. And here's the prior one, pretty good solid move. Here's the one, if you're noticing something, each move is getting a little bit smaller. Move here, here's another one. We get up here, we stall, we come. Notice how each move is subsequently smaller and smaller. That's what you have to say, where you can say, and that's what I'm saying. You don't even need an oscillator to say, wow, I'm starting to see this market looking kind of tired. I mean, I could look at an RSI and I already know what it's going to look like if it's on the daily, without even knowing. Someone could just throw in like, okay, I'll draw it for you. I already know what's going to show you, because if you look at the bars, and you look at the bars, I mean, not just the bars, but how they're closing, opening, closing, you can already see a lot and make a determination as to what's going to happen here. So anyway, we're a bit stretched in here. I think we had 15,183 before, potentially. And here's 126, but I'm saying once again, we're given a lay of the land. Let's take a look here on the 2-hour. $171. And Apple still closed close to its highs, and Microsoft closed at new all-time highs. So we can still get an additional kick here. We looked at the daily before, and it's just that the next levels, if you're looking at fibs, is way the heck up in here. So here's 15,330. Unless we have like a bluff, and you have to be cognizant of that as we come in on a Monday. Last Monday was a bit suspect because we just didn't see the kind of reaction. And why last Monday afternoon I was telling people, hey, look, it looks like the car's running out of gas. It looks like it's, when you step on the accelerator and you get one more less boost, which is really from the fumes. And sure enough, that was a high. And then we retraced back. Problem is, a lot of people just got good and short because they were betting the farm thinking we're going to fall, which really the prior week they were doing the same thing. So I think that's what convinced people to go really push this thing lower. And I think they got trapped. And we can take a look on the, I don't have it saved here. Hang on. Oh, okay, Bran was saying good morning. Okay, and good morning, Bran. I didn't even see the notes here, or I did see the chat. Sorry about that. Lots of times I used to have people asking all kinds of questions like, look at this market, look at that market. And so I rarely ever see that anymore, so I haven't asked. But here's the thing I wanted to go and share. And when I rolled over to the weekly, it doesn't show it. But if you look here, let's see if we can get this thing a little bit bigger. Okay. Okay. So here's the volumes, not the market profile, but the volume profiles for the last 5 days of last week. So here's Monday, Tuesday, Wednesday, Thursday, Friday. And then if you look at the volume, this is the volume for the entire week. Okay. So on Monday, remember how we finished up in here, and I was thinking, okay, this market looks like it's run out of gas. On Tuesday, we actually made one more boost higher, and then the wheels came off the caboose. And then Wednesday, and then Thursday, we came all the way down here, and it's not me, but I'm just saying I was looking at the profile when I said my target is 14,939, and the low on Thursday was 14,941. Now, like I said, it's not anything great I did. It's just that I looked at the profile, and I'm not a profile aficionado. I've used market profile from way back when, but I just never really could understand it. But all I do is I just, like I've always done before, I just look at confluences of either levels or whatever, fibs or whatever. And so that's how I came up with that level. But here's the key thing. So we dropped all the way back here. So now if you look at the key volume on the week, wow, it was 15,115. Now that happened to match on Fridays. So what my thoughts are on what that happened was that a lot of people got good and short, and so when we came back, they're like, "Oh, I'm not worried about it. I'm not worried about it. I don't know about you, dude. I'm adding on here. Look, here's volume from Tuesday. I'm getting short. I'm adding on. I don't care about you." And then it keeps on going higher. We're probably going to break lower. We just got overdone. I mean, I can cover some of it here and see if we ride lower. And then finally, at the end of the day, they're like, what the hell? Well, I can't take any. I mean, I just got to get out of these positions. So that's what I'm thinking is why the key volume for the week was right here. How the heck was the key volume of the week all the way up in here at the highs? You see what I'm saying? But I think that's what's happened. At least that's my take. I try and put myself, and I think that helps a lot. If you try and put yourself in the other person's shoes, you could be bullish in market, but you want to say, why would they get so bearish, blah, blah, blah. And the same token, why is it here? Put yourself in their shoes and say, okay, I'm bearish. I'm really bearish. I'm thinking this, okay. Okay, well, as it rallied back here, this match with key volume from Tuesday, which probably makes some sense why they got short. They probably kept on pushing. Friday, we just couldn't break any lower. Oh, wow, that probably makes sense why they did. So then if you think about that, you think, well, okay, but what else? Well, chances are, even if these people are bearish, they're not going to jump in and say, now let me get short. So there's probably an opportunity for us to still continue to move higher. And don't forget, Microsoft closed at new all-time highs. And Apple is at its all-time highs. So we can still push up higher. So I'm going to go with 15,182 for the resistance. Doesn't mean we can't blow out a little bit higher. So we'll go 15,182. And what the heck? There you go. And then for support, this is the pivot, and I shared this before. And actually, I didn't do as good last week as I should have, but that actually kind of maybe have saved me. I was talking to a friend of mine. Him and I exchange charts on Twitter. He does a lot of profile stuff. But remember, I got, Monday I was like, oh, this market looks like it can break, blah, blah. So we came down here and they held the pivot. Oh, and then this must have been Tuesday. So we come up in here, and when we broke, thing that made me so mad was we came back and we failed again here. Now, eventually we got back up here, but the key thing is this market failed so many times against this 15,057. And I think, so once you got above this 15,057, you can see it barely closing above it. That opened the door for us to go higher. And then look where they came back for support, 15,057. I probably should have been more aggressive, and I wasn't, but it may have helped me because then I might have stayed more aggressive down here and probably would have got me to get short here, and I wasn't. So although I wasn't aggressive as I should have been last week, as we broke lower, I kept thinking, okay, they're probably going to pop up above this 15,057, and then I'll get short at 80. And they didn't, and they just fell apart. I think it must have been this one. I don't remember exactly. But anyway, but that may have helped me overall because then I wasn't in a compromised position. When it was up in here, I was just able to just look at things more from a neutral standpoint and just to appreciate where the market was at right now and what it could do against people. But anyway, or against those that were short. So it's got to be 15,057 here. Matter of fact, I thought I saw some guy on Friday and he was looking for that level. Of course, it didn't get down there. So now let's go move into gold. Well, we know the wheels fell off the caboose in gold, and all you have to do is look here to see where it went. See, we went down here to that 1680. That's where we went down here. It's right in right there. And on a continuous chart, you can see it more clearly, but we're just looking at the D skull. But that's where we had support when it went down there. And it was once again just going by the levels. And actually, at the time, we were looking at a continuous chart. So that's what came up with that. I'm not going to bother with that. We already know that was support that came. I didn't even catch any of this stuff. I didn't even know this was happening that Sunday. I just came in like, what the hell happened? Although maybe if I was there, maybe I would have caught a little bit on the way back. I don't know, but I just did. But we had already broken down. And I thought, okay, they'll probably break down a little bit more. I didn't see anything like this happening. So that was really a gimme there. If you look at this, which I just noticed just now, that is one heck of a hammer on the weekly. That is pretty interesting. So I didn't even look at that on the weekly. So here on the daily, go to our notes. So gold continues its counter trend rally, nearly reaching 1786. Resistance will be 1786 followed by 1790 with support of 1767. So you're like, okay, what the hell does all that mean? Well, you remember we had that big fall. Remember we came on the air that Monday and we're right at the 1754 and I said, hey, this is resistance. You look at this. You're like, oh yeah, I can see that. That's clear as a bell. And then we rotated lower. Eventually we went down to sub 1720. We bounced back. And I had resistance if we broke high around 1768, 1767. Kind of surprised that they pushed higher, but they came up in here. They did get up to the 61%. And you can see here we had a little bit of a gravestone doji. And we've dipped back, not a whole lot, but we have dipped back. But I think that we might be able to get a little bit higher. Maybe we can take a look at the profile and see if there's something there. So let's go to that. Come on, Pokey. Everything is still really up in here. Let's go back. Let's see. Do we see something? I don't see a doggone thing. And here's 1796. Okay, that was regular trading hours. Let's do the full session. A little bit different here. Here's 1783. So there it looks like, see how we made it right there? But that was a midpoint. So that was just a midpoint on this day, which was August the 6th. Probably makes sense. And we did have, I remember before 1785 was key. God, I really don't see anything here. Maybe we can make it up to That'd be a pretty big stretch to get up there. But maybe I mean, we've got that weekly hammer. Double distribution here. I guess just stick to what we came up with as far as the analysis. Right now, point of control is at 1781. And it's also where the key volume is right now. So it looks like they were loading the boat around 1781, although it made it to 1784. And remember that 1783, that was key, 1783. So the smarter money waited until then. But it just seemed like they may have a little bit more going for them. So I go with, let's go with, once again, the 1786 followed by 1790. It really should be 1783. I remember 1785 was key before, but it's shown here on the profile 1783. So let's go 1783. And the stretch, let's just call it 90, which, I mean, with that weekly hammer, that's pretty key, but it is bearish. And on the downside, 1767. Then moving on to crude oil. We've moved on to October crude. So crude has posted a significant slide from the 69.40. Remember, this was our area here. I never did get short there. I actually was going to put in a position. I ended up not, but it's kind of good because it just sat there for a couple of days. I mean, even at the best, I think it would have been up like, it still wouldn't have been bad, but it took forever and a day. It was like about 20 some cents. Although eventually it did get down. I mean, again, I think, as a matter of fact, I even think the low was 69.02 and it bounced right back up. Eventually we dipped below 69. We came right back up again. And we thought, wow, if we get above 69.50, and then of course that was the September market, I go, wow, we can really scoot on up to 70.23 or 70.27. I don't remember what it was. Daily support comes in at 66.63. Support will be 66.58 with resistance at 67.21. Wow, we just blew through that. So look at that. There was some, I saw in the chart, I did see some support at 66, I think it's 85 or 90, and we bounced off of that. But we'll stick with our 66.58. And we did get above the 67.73. This is going to be resistance right here. You can see right there. That is a key level there, which is 67.92. And actually, if they were to bust up above, it'd be 68.06. But this is pretty key area right there. So we'll just go with that 67.92. And it didn't quite make it there, but it almost made it to 67.92. We can take a look at the profile and see what it looks like. quite often the webinars that we do on the Monday will be somewhat lengthier because we spend more time kind of getting an idea of what we're going for the rest of the week. I think on the webinar on Thursday, I think it might have only been like 22 minutes. I mean, there was nothing going on. Nothing was happening in FX. But let's take a look where we are right now. And we're looking at full session. Um, the only thing I hang my hat on, you see the volume for this day that comes in 6804. And it looks like we made it up to what, 6805? Yes, you see, that's the only thing I can see I could say I hang my hat on. And then if we go RTH, oh yeah, you see, Friday's point of control. That'll be key. Friday's point of control in RTH was 6816. And key volume on that day was 68. Oh wow, 6808. You see, RTH key volume 6808. So that made sense when we made it up here. We've rotated back a bit. Also, if you look at the IB high from the 11th, that IB high is 67.98. You see, so you had, that's the way I like to use the profile. Although the initial balance isn't part of the profile. But you see here, you've got the initial balance high, 67.98. You got the key volume from that date, 6808. You see? So when I'm looking at this come back up and then look, Friday's point of control, 6813 or I feel like 6815. So you got 6798, 6805, and then 68. So you're thinking, okay, it's already had a pretty good run. And then you can look on here on the footprint, and we take a look and we see, okay, look, this thing's running higher. Look where the key volume was, 67.93. See, that's where the key volume for the entire bar was. And as we come up here, you look here and look at this, 240 contracts traded at 68.10. Oh, but that's September. Let's put this to October. September may still have a little bit more volume, but it's time to roll over. Okay, so you look up in here, you can see way more volume in September, but it's time to roll over. Okay, so you can see here, look how many, it makes it more tougher, but if you're looking at October, because it didn't have all the volume there, but you can see here, same thing as the September. You see the key volume level, amount of volume that was traded on that bar is way the heck down here. You see how the market's now rotating back? And I use the volume here, I'll use these for support. You see, so if you were short, I'd be looking for support to come in right there, 67.40. So you can see for this market. Then what you'd want to be doing if you got short up there, you would looking to cover some of it as we come down. You don't want to wait all the way till the end. The next key volume, once again, it makes it a little bit tougher because we're in October and the key volume's in September. If you were trading crude a lot, then you probably have two profiles, not two profiles, but two footprints, one for the September, one for the October. But you can see, look here, look at this 92, 51, 26, but look at this 249. So you can see here, this was key. So any moves down here, they're going to be looking to go and cover as we come down that area. So that would be support. But that's the way I use the footprint. So so resistance was 67.92. Okay, so we're all set. And there's the bias chart. And thanks for joining us here on the European Crossover webinar. Have a good day.